Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large-cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Tuesday afternoon, we have Shawn, Cruz, manager of trader services at TD Ameritrade, to discuss Nasdaq-100 performance. We'll also take a look at the Nasdaq Volatility Index, as well as some inflation data that just came in this morning. Shawn, it's great to see you as always. Let's pull up your first chart here with some fresh levels to watch on the Nasdaq-100.
Yeah, one thing that's interesting is some of the levels that I'm keeping an eye on today are actually levels that we had identified in weeks past, and that would, on the downside, looking at about 15,378, maybe a little bit below there now. We're also keeping an eye on that 15,446. Those are the key levels I'm looking at now. If you actually look at what's been going on intraday, that level right around 15,365, 15,360 is actually held as support about 3 or 4 times in the past 48 hours since the start of the week. So that does look like maybe for this week, you might want to keep an eye on that level if we do get any further pullbacks, as the market seems like it's trying to find its way now. And we're getting a little bit of a mixed picture. But right now, the breadth we're seeing about 68 of the issues in the Nasdaq-100 declining, and only about 32 are advancing. So I think that's one thing to take note of, is you just have the names that make up the Nasdaq moving lower on a day like today. So it makes sense we're going to see a little bit of softness.
So, Shawn, when we take a look at the Nasdaq Volatility Index, or what we call VolQ, particularly in the month of September, which has this fabled history of being more volatile, anything that you're seeing within the index itself that could suggest some choppiness ahead, or is it holding steady just as the index has been?
Yeah, I mean, I thought it was at extremely low levels when it got down around 15 and even lower than that briefly, just because there's just so much out there that should be a driver of some sort of uncertainty. So I think it makes sense. We're seeing it just sort of trend higher here a little bit, but we're not getting these pops where we're going from 15 to 20 or 15 to 25 overnight. This is sort of a little bit more of an orderly grind higher in volatility. And there's a lot coming up. You've got the quad witching this Friday. That's going to usually drive a lot of volumes. That's one thing to keep an eye on. We have the Fed meeting coming up next week that everyone is really keeping an eye on. So I think it makes sense. You're seeing, as we go into September, which is known for me a little bit more of a volatile month, you're seeing VolQ just trend steadily higher. But like I said, I don't view it as anything to really drive major concern, because it's still at a relatively low level. And also, we're just not seeing these explosions in these measures of volatility or uncertainty that would indicate the market's getting caught off guard. Because when you see that, that can lead to some drastic pullbacks, to see some panic behavior out of the market, but we're just not seeing that. This is a slow, orderly grind higher. And I think that should, if nothing else for investors, still make you feel okay with where the market's at right now. And sometimes these pullbacks are a little healthy to get here and there intermittently. But as long as we're starting to see some of these levels hold, which I do like to see, that we're seeing some previous resistance levels are now becoming support, that's a good sign for market stability moving forward.
And Shawn, to your point that traders will be watching what comes out of the Fed next week, of course, we had inflation data this morning. One of the key components that the Fed bases its monetary policy on is, of course, inflation. So how did you digest that reading, and was there anything notable within the market, even outside of that Nasdaq 100, that reacted to the number?
Yeah, I mean, you saw when that number came out, a pretty big drop in terms of anything that measures uncertainty or volatility. Saw the markets actually respond pretty favorably. And I think the big thing that I was noting out of that was, when you hear from the Fed, when you hear about inflation, and everyone is saying the inflation being out of control might force the Fed's hand to tighten sooner rather than later. The Fed has identified some things that it says, look, we feel that this inflation will be transitory. It's not going to be persistent or long lasting. So we don't really have an immediate knee-jerk policy response to it. So a lot of people have been keeping an eye on these inflation reports to see if that is in fact happening. And if you look at it, and I know there's a lot of diverse opinions on this report today, but if you look at it just in terms of what we've heard from the Fed and what you think this could really mean, we looked at those reopening components for the CPI report. And the reopening components are the things the Fed said, look, these are going to spike up. It's going to be temporary. They're going to start coming back down. So the reopening components, you're looking at used cars and trucks, rentals, lodging, airfares, food away from home, people going out to restaurants, things that maybe are going to surge initially when we do get some easing of restrictions. People are able to go back out there, but we'll probably just moderate back to more normal behavior over time. And we saw, if you look at the chart in the yellow orange, there's this spike over the past couple months when we had a lot of reopenings, and this was where everyone was pointing to of some of the inflation concerns. But if you look at this month, they actually dropped and moved lower, which I think is maybe being taken as a sign by some that this is in fact sort of the first step. This isn't, one report, but you want to see this sort of continue. But this is what we should be looking for in reports if we are trying to get signs that inflation is in fact transitory. But if nothing else, a lot of Fed watchers have said they feel it sets the stage for the Fed to not have to move as soon as maybe some had feared in terms of pulling back some of that monetary policy that they put out there at this September meeting. A lot of investors and a lot of analysts and economists are now maybe, if nothing else, looking at November as the earliest we should expect that.
All right, Shawn, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.